So, guys, where were we? We're saying that it's a new year, and it looks like it's going to be a very interesting new year for us and for the euro. Now, as far I know, this is supposed to be a coverage about the ECB announcement, but what can I tell you? This isn't one of those ECB announcements where we expect to hear something dramatic. Okay? So, there are no expectations of changes in policy from the ECB later. And if there are no changes in policy, what does that tell us? It tells us we stick to our technicals. We stick to the idea of maybe we've got a nice weekly double top forming. Now, one thing though, if we're saying that we don't expect any changes in the ECB's views, and all of a sudden we start hearing that, or during the press conference, because let's put it this way, we don't expect changes in your policy rates. Maybe there will be changes in how Mario Draghi views the economy, his opinion on where things are going. And of course, changes in his assessment of the economy will have an impact for the currency. Although it's pretty rare for Mario Draghi to suddenly have a big shift in his position on what's going on. So we don't expect a rate cut or a rate hike. And during the press conference, which normally is actually more important, we also do not expect to hear about new policy tools. Okay, hear about how liquidity could be added. Of course, if there is such a policy tool that will be announced, any surprises there would probably mean that we look for a weaker euro. Despite everything, the bias of policymakers, or at least the bias for the Mario Draghi, is how can I try to make sure that this recovery is going to stay, is going to be prolonged, is going to be sustainable. And the only way you do that is to come up with measures that would introduce liquidity, and that, of course, weakens the currency. But like we said, we don't expect any of this. This, to me, is more of a technical market for now. So, guys, let's start off by reviewing where we stand in our euro. And let me start it out by taking a look at the big picture. So if I look at the big picture, what will I see? We'll see that we've got our charts around your 61.8 replacement of your sell-off from 2011. Pretty nice resistance level. Last time we were here, last time we tested that 61.8 fib at 38.32. We saw a big rejection in the monthly scale. We saw a nice sell-off from 38.32 down to your 3300 level. It's only been a few days into the month, a few days into 2014, and yet, if you look at your chart, you've already had an interesting rejection in the attempts to push through your 38.32 level last December. You've already had a nice black candle in our monthly chart. So what am I trying to say here, guys? What I'm trying to say here is, technically, we seem to be at a good place to look for bear markets to turn up. Of course, I would love to have been short coming from 38.32, but let's just make do with what we have now in our charts, with the market around your 3600 level. Okay. Policy-wise, what do we know again? We know that as much as possible, the ECB would want to keep liquidity in the market. There will be no pressure to talk about, or there's no reason for talking about inflation these days. It's not happening. In fact, I actually saw a report the other day that said that if the U.S. in the U.S. Okay, this is the U.S. case, but essentially the same thing applies for the Eurozone. In the U.S., they were saying that it would have been better if there's actually inflation, because well, Eurozone doesn't really print money the way the U.S. does. So I'm not expecting that their effort to maintain liquidity will somehow lead to your gold charts rallying to 1600, rallying to 2000 again. Technically, there is a need for a pullback. A lot of people have been saying that, and I look at my charts and I also think that should be happening. But I don't expect, the lack of inflation, sorry. Well, that's really one thing, because we have to remember that the premise for gold's rally was the central banks were printing money. If central banks print money throughout the 20th century, whenever a central bank prints money, inflation kicks in. And if there's inflation, gold prices jump up. So gold's jump was premised on us having inflation, and yet we did not get inflation at all from 2007, 2008, 2009, 2010, 2011, 2012, 2013. So without inflationary pressure happening, you've got people tired of looking for 2000 in gold. But we also have to consider that gold has pulled back from the 1900s, from 2000, quite significantly already. So, you know what? Let's take a look at the chart for gold, but let's talk about euro for now, and then we'll go gold. So, I look at euro and I'm thinking, big picture, you've got a nice resistance at 38.32, 61.8 fib. We find ourselves potentially forming a monthly scale double top. If you go weekly, you'll see that within your monthly scale double top, this is your monthly scale double top. It looks a lot clearer. And what else do I see in my weekly chart? I look at this and I'm thinking, you have a nice false breakout of 61.8 fib before. Final week of trading for 2013. You failed to stay above 38.32. You had a bearish engulfing from last week. We need an excuse for a follow-through bear market. Of course, the week's big issue really is what's happening in the U.S. jobs market. So we're not seeing any big movement in our euro just yet. But I suspect if those jobs data tomorrow come out strongly, you get 2010, or rather, you get 2100. Sorry, you get 210,000. You'd end up with a nice strengthening in your dollar. You'd end up with your euro trying to make a run for its weekly scale double top trigger at 3,300. But for now, we have our double top. We have our argument from price action to look for a bear market, but people are waiting for that next big catalyst. If you look at your dailies, we've been trying to get a bear market going. We've triggered a smaller double top pattern in our daily charts, but really we haven't been able to see sustained weakness after triggering that double top. So again, we need a nice big external catalyst, and right now, that nice big external catalyst is really just your NFP release tomorrow. But let me see what else do we have in our euro from a technical perspective. If you look at our indicators, you've got MACDs down. You're just crawling around the 20 level. I actually like where we are. We're just below your 55-day EMA. I look at the possibility of us getting some shorts of the current level. Let me just see what the signals are intraday. Well, in the 4-hour charts, we've got your stochastic up, MACDs with a bullish crossover, price action, little momentum for a follow-through. Hourlies, mixed signals, a bearish fractal pattern in your hourly chart. So guys, you don't have a clear direction, but overall bias seems to be bearish. Would certainly love to be short from just under your 55-day EMA. So guys, there's no sense of urgency, but we really prefer looking for a rejection from the daily EMA lines in your euro. So folks, for now, we're not suggesting that we take any action. Of course, it's best to wait for the announcement, although we don't expect anything out of the ECB. It's best to wait for the press conference, but again, like we said, we don't expect anything out of these guys right now. There's just no reason for them to do anything. Alright guys, technically look at your chart. You have a nice rejection from R1 in your euro. Looks like we're trying to push for that again, and I would really suggest that we just look up shorting from there once more. So folks, we're not suggesting we take action, but our bias will be on eventually getting this thing going. Remember that I've always taught this idea that the first time you test 61.85 level, you get a rejection. Now, this isn't exactly the first time. We've been here before and we did get a rejection. However, we do not have a catalyst that we think would be enough to push through that 38-32 area. So any attempt to rally, we want to be shorting it. But let's take a look at gold now. So earlier we were talking about inflation and how the fear that quantitative easing by the Fed and other central banks would have meant that there will be a very big rally in our gold prices. Now, we did get a big follow-through surge from your initial QE programs. But given that we really did not see the pressure of, really did not see price pressures, we ended up with markets disappointed and unwinding the huge positions that they had. So last year was the worst year for gold. I would have loved to say this year is going to turn out to be the same, but let us consider that we've had a substantial pullback already from our 2003 lows. Your pullback has given you more than 38 points of retracement. It would be interesting to bring things down to your 1008 level. Let me just see intraday how are we looking. You know, you look at your big picture and you really look bearish. Let me just see, guys. So signal-wise, I've got mixed views in the daily picture. And by the way, in the dailies, we now have a fractal pattern from this high from Monday. And that fractal pattern suggests that we really ought to look for a bear market, a bearish turnaround. Not to mention you're coming from EMA lines. Let me just see things intraday, folks. You got a mixed view in your 4-hour picture. Bullish stochastic, bearish MACD. You're pushing for R1, just under. Would really love to get a rejection from these areas. So folks, there is no sense of urgency. In fact, you're seeing some buy signals in your hourly picture. But we look at our gold charts and we tend to think this ought to be a sell on rally. So for now, folks, just like the euro, we're not in a hurry to do anything. We're not in a hurry to short. I'd love to see some better pricing. Maybe we get to your 1240 region. Alright guys, let me get back to overview now. Exactly, Bradley. Well, the first place, when we initially saw that, like I said, when we initially, everyone was saying this is the end. Your inflation's gonna creep higher because major central banks are all printing money. And yet, that didn't happen. Alright, let me get back to overview, guys. Just give me a sec, and then we can go through other pairs. Now, I know this is supposed to be about the ECB, but like we said, we don't expect anything new from the ECB announcement. I'd much rather that we look at the other possibilities out there. But give me a sec. Hey, Rashid. Well, let's take a look at your dollar CAD. Interesting breakout, but the real body of the candles are getting smaller. So are we somehow approaching some form of resistance? Are we needing some form of top in dollar CAD? Well, let's see what the charts. Ooh, what happened? Let's see what the charts are telling us. Let me clean this up. So, I actually thought before that this was going to reverse. I thought that we had a diamond pattern here. But there's your breakout from the last 3 days. What now? Let me see big picture. Where do we stand? Very far from what I would look at as an expensive price. So we've crossed through 38.25 retracement of your sell-off from 2009. We could argue that on a monthly scale, we've triggered a double bottom. And we really ought to rally up. Maybe towards your 1870 area. If I look at average changes, it's been pretty wide of late. 86 pips. So there is room to maneuver. How's the intraday chart looking? Weeklies, there's your bullish breakout. Dailies, again, the bullish breakout. Now, it may look from the big picture that your dollar CAD's really bullish. It's got room to maneuver on the top side and everything. But I would point out that you're also seeing signs of lost momentum. Smaller real bodies. If I go indicator, what else do I see? Confluence of buys and overbought stochastic. Rising MACD. For our picture, we have a bullish MACD. We are overbought in your stochastic. Price action so far actually looks bullish. Hourlies, you have a bearish MACD. Your stochastic is trying to come out of overbought area. So what are we saying then? There is no sense of urgency about buying your dollar CAD. Perhaps the thing to do would be to look for some form of consolidation, a bit of an overlap, and then use any dips to the low so that overlap as a possible bullish entry. So guys, I look at this, and although we've had a nice bullish breakout, I am concerned about the loss of momentum. If I were to get a close below your R1 on an even and hourly basis now, I think that we'll be risking a pullback in our dollar CAD. Alright guys, that's a minute. Just a minute to wait for what's likely to be much ado about nothing for us. The early candle for the moment is turning out to be a highway. Exactly, Pan. Well, folks, nothing's happening. The time's right. Are we trying to push higher a bit? Seems to be the case. But I'm not going to take the buy side just because we're trying to push higher here. All right, folks. So as expected, unchanged rates from the ECB. Exactly, Rashid. And like we said, we really didn't care. We really didn't expect to see any changes here. If there's going to be anything at all, it's going to be happening 45 minutes from now when we have the ECB press conference. So let's go elsewhere. There's an attempt to try to push up with this no change position, but like we said, I'm not really keen about buying your euro when we've got plenty of reason to be bearish. In an attempt to rally up, I'll just look for a place where I can short this. But let me move on and let me see where else can I go. Something that's been bugging me for some time. Let's take a look at our Aussie. To weaken the currency. It's got its goal, it's got its target of 85 for AUD, but they're not actively promoting anything to get there. Now that said, what do I have for my chart? I really like it when I've got a rejection from EMA lines that enters a consolidation. Because to me, that's immediately a call for, can I ease down to your previous congestion floor? So in short, we're actually looking for things to ease down to your 8836 area. Now let me just see where we are at the indicators. So average change is about 75 pips. You've had 47. So you're not really likely to get a nice swing here. If you look at the hourly picture, you have a mixed view, a bullish MACD and a bearish stochastic. So for now, folks, I'm not suggesting that we do anything. But I look at our Aussie and our target is to... Okay. The bars is the signal line in my chart of MACD, your standard MT4 MACD. I normally use it just to figure out or to confirm where the trends are. I don't follow this method that much anymore, but it used to be that when I'm active and I'm trading, I really focus on instances where I've got my MACD setting somewhere and I have the stochastic crossing in its direction. I really like to use this method before. So you have your MACDs down already and then your stochastic crosses in its direction. Go ahead, take action, do something. But that was before. Now I also look at other stuff before I really make my decision. So again, folks, as far as Aussie is concerned, we are looking for this to ease down to 88.42. Your lows in December at 88.22. We're not in a hurry to try to get anywhere. We'll be happy to just test those support levels. And what's backing that notion of let's test those support levels? The idea that you have the RBA with their desired exchange rate of 8,500. So let me get back to overview, guys. Any comments, questions, issues? Looks like you're actually bouncing up a bit in your euro. Well, I love cable. I love cable. If there's another currency out there that I tend to think could be strong, I automatically point my finger to cable. There's actually a threat of a housing bubble there. If you look at your very big picture in cable, what do you get? You've got a rally towards your consolidation highs at 67.52. You may have lost some of your momentum. But I look at this and I'm still seeing that momentum, that argument to get to 67.52. So for now, folks, there's no sense of urgency, but I look at our cable and I'm really thinking this is a buy and dips. find yourself just above your 21-day EMA line once more, and you ought to be able to take the buy side of GU. Hey, cat tips, no sound? Or is it working now? All right. So again, there's no sense of there's no pressure to do anything in our GU chart, but our bias is valid for here. And I really think that at the very least we ought to look at testing your 6750 area. Can we move beyond it? I would say why not? If I look at my chart, we have an even bigger price point to watch out for. At 50 fib, also a consolidation floor from before. So this is just a start. Can we get to 6750? Is just a start. Once we get there, we'll be talking, can we get to 7300? $1,210. You got Deutsche Bank forecasting around 250. And what does this all mean for us? If we get the strong data, a strong number, that becomes argument that, hey, go look for a stronger US dollar. That's been the pattern. Anything else that we ought to consider? This January is actually seeing the start of taper. We're not seeing a lot of talk about it because it's really minuscule. Now, despite we're saying that the taper is minuscule, it will be important to see in a couple of months if taper is actually having an impact in liquidity in the financial system. If you recall, the Fed also mentioned at the same time that they're actually willing to roll back taper. They might even aggressively buy government assets if necessary. Well, if they say that the taper needs to be rolled back, then I would look for the dollar to lose ground again. Because to roll it back means that they'll start buying a lot more bonds again. And to do that, the Fed, in theory, will have to print money. And if they do, your law of supply and demand kicks in. The more money gets printed, the weaker that money becomes. Hello, Fabio. Well, if we look at our euro, we actually have this rejection from R1 before at 36.22. I would consider shorts coming from there, but I would also look for a tight stop. So if I say came in from just under your pivot, I'd probably want to get out of it if I don't get a quick rejection from that R1. For the next 10 years on a yearly basis. That would have been, or that should be argument for the currency to weaken, but so far it's not doing that. So we'd love to hear Mario Draghi comment about these kinds of forecasts. Okay, folks, we've run out of prediction. I'd actually look for a weaker euro. Cable, I think, will be able to hold its own against the dollar. So for euro, I'd look at it as likely to head back down to your 2700 area. For GU, I think we'll just stay where we're at in GU. We'll just continue oscillating, but stay around your 6700 area. Maybe get all the way up to 7300. But likely just sideways action, no big trends. It's gonna keep pace with the US dollar. Remember, its economy is also doing good. In fact, in some data points, even better than the US. Well, the yen story really is about, it's going to be about Shinzo Abe now. Kuroda's done his job. They're well on their way to doubling the money base. It's an old story already. I don't think that traders are going to be excited to hear about, yes, we plan to double our money base. Although if you look at the numbers, mathematically, dollar yen should be pushing for 113. But you also have to consider that markets are tired of that. They need something new. So what does that mean for me? I have no particular bias on where yen's going. It largely depends on what kind of policy action the government will be taking. It's all in the hands of Shinzo Abe. Alright guys, thanks for attending the class. I shall see you in our normal sessions. Or you can drop by to my Asian session in FX Instructor. It's around 00 GMT. So basically, the start of the trading day. Thanks for coming in, guys.